I want to bring in White House economic advisor Larry Kudlow. Larry, welcome back to the program. It's great to see you right there at 10 o'clock Eastern Time. Now, can you assure us and our viewers, can you assure us that we will not go into a recession in the next 12 months?
Well, that's a tough word, assure. Lord knows what external factors. How about this? I try a little different angle. Looking at the data, both the coincident and forward-looking indicators, I believe there is no recession in sight.
Okay.
All right? I believe that.
Okay.
And I want to add, Stu, I know we want to get to this. It's very important, and you're going to cover it incisively, as always, that the payroll jobs number, which was 136,000, but you got to add 48,000 to that, 45,000 to that, because those were the revisions the last 3 months. So you're at 180,000. And by the way, those upward revisions are themselves a leading indicator of better growth.
Okay.
And then let me go to my favorite subject. Just give me one little memento. We have a 3.5% unemployment rate, best in 50 years since 1969. We were both alive in 1969, so that's a good thing. I want to say the unemployment rate comes from the household survey. All right? You got to look under the hood. I don't know why analysts don't. It's very important. It emphasizes entrepreneurs and small business. Stuart, the household survey was up 391,000. This is the fourth straight blowout month. It is running close to 400,000. That's like 3 times the payroll number. And that's where not only does unemployment come from household survey, so do the participation rates in the employment ratio, which were up. And that is frequently a leading indicator of a better economy. So I'm asking, once again, we did this last month. I'm asking you to look under the hood at the household survey and the unemployment rate. And by the way, that unemployment rate is terrific. We got historic lows.
We did.
African-American, Hispanic, female, et cetera, et cetera. So I think it's a very powerful jobs report.
Okay. Overall, there are some signs that the economy is slowing down.
Yes.
There are some signs. We saw manufacturing. We saw a smaller rate of growth in the services sector. We do have a modest slowdown in the rate of growth of new job creation. But my question is, how do we turn this around? How do we go back to 3% growth? What factor will give us that 3% growth?
Well, by the way, the household sector, the household survey is not slowing down. It's actually speeding up. But let's put that aside. I don't want to beat a dead horse. There's a couple issues, too, that are worth looking at. And I acknowledge that after 3% first quarter, the second quarter was softer at 2%. And I'll wait for the numbers on Q3, probably the same. Fourth quarter going to be strong. I'm going to tell you why. Now, look, I got 2 big problems here. One is we are still suffering the aftermath of severe monetary restraint in 2018. Now, that restraint is being removed. And in fact, we are about 6 to 9 months. That's the usual lag. So I think the worst of that Fed obstacle may be coming to an end. The money markets are suggesting more Fed rate cuts. That will help. That's a big help. Second point, regarding manufacturing, and particularly manufacturing exports. I know everybody wants to go after President Trump, who is doing, in my judgment, he is doing the Lord's work to defend the United States economy and national security by showing how China must change its ways. We'll get to that in a minute.
We will.
Here's the biggest problem in manufacturing exports. It's not China, Stu, not by a long shot. It is Europe and Germany. Germany, in particular, we've lost 150 billion manufacturing export sales to Germany in recent months, and the Eurozone in general is in a virtual recession. I'm just saying to you, I understand people are concerned about tariffs. Hopefully we'll talk about that. But when you look at the actual evidence, look, we don't export that much to China. The loss in manufacturing exports to China is about $50 billion. The loss to Canada and Mexico is about 100. By the way, their economies are flat. The loss to Germany was 150 billion. So I'm just saying, as we did at the UN and the G7, Madam Chancellor Merkel should be cutting tax rates, individual and corporate tax rates, and deregulating to get their economy moving again. Even France just announced an income tax cut on top of a corporate tax cut. If we had a better European economy, we'd be exporting substantially more in manufacturing. The problem's not China on that score. China
Larry,
has many other problems.
All I would say,
Europe.
Larry,
it's Europe.
All I would say, Larry, is don't hold your breath on any European government seriously cutting taxes. You know that. That's not going to happen. But let me move on.
I'm going to send you over there as a goodwill ambassador to spread supply-side economics.
Not me,
Lord knows I've tried, Stu. I may as well let you have a shot at it.
Not a press, huh? What do you think is the impact on the economy of these impeachment proceedings?
Virtually nothing.
Nothing?
Virtually nothing.
What about the impact on the market?
You know, I think there might be, at least at the beginning when the announcements were made, a modest and temporary impact. The market is looking at fundamentals, growth, profits, interest rates, policies, things of that sort. Look, I don't want to go deep into the impeachment story. My own personal judgment, and I was right there at the UN when all these stories broke and we saw the letter and we saw the complaint and so forth. I don't think there's a leg to stand on.
Okay.
But I'm not an expert. Let me say this. Here's what matters. President Trump has instituted pro-growth, pro-prosperity policies, lowering tax rates, rolling back costly regulations, opening up the energy sector, and fighting for lower trade barriers and reciprocity and a level playing field with China and other places, okay? As long as those policies are in place, and they are still in place, and I do not think House impeachment is going to change that because they'll never get through the Senate. As long as the Trump policies are in place, Stu, I think it bodes very well for the economy. If I'm wrong and those policies are changed and reversed, with some of these crazy ideas about national health care and Green New Deals and whatnot, cost us probably 15, 20% of GNP. That would be a disaster. But I don't think the market believes that's going to happen. I think the market believes President Trump's going to be around for a long time. I think he's still the odds-on favorite. Therefore, the policies will remain in place, and that is pro-growth.
Larry, I want to bring up China trade and China relations. And this is mixed in with some nasty politics here. President Trump reportedly brought up Joe Biden on a phone call with China's Xi Jinping in June. Reportedly, they talked about Biden's political prospects, and Mr. Trump said he'd remain quiet on Hong Kong during the trade talks. Can you offer any clarity on this?
I really can't, Stu. I wasn't on that phone call.
Okay.
And frankly, haven't heard much about it since.
Okay. Let me move on then. The high-level trade talks,
yes,
the delegation comes next week. Now, set the scene for us. Where are we going with this? Are we close to any kind of agreement? What can you tell us?
You know, I think the atmosphere is improved from where it was, let's say, last spring and summer. For one thing, going into this, China has been buying commodities, soybeans, pork, and others. They delayed some tariffs. We've delayed some tariffs as goodwill measures. The deputies level meeting went well a couple of weeks ago, and the principals level meeting, Ambassador Lighthizer and Secretary Mnuchin, will be meeting with Vice Premier Liu He and his group Thursday and Friday. As I understand it, Monday and Tuesday, another deputies level meeting will convene to go through the agenda. So far as I know, everything is on the table. And I think the sort of mood music, the background music, is quite decent right now, and it's improved from where it might have been last summer. I don't want to predict the outcome. I'm not in the business of that. President Trump has said he'd like to have a deal, but it has to be a good deal covering all the issues, the IP theft and the forced technology transfer.
Does that look likely, Larry? Does a comprehensive deal like that look likely?
The president has said, I mean, it's important here. The president said he believes Xi wants a deal, and the president has said he would take a deal, but it's got to be the right deal for America.
Okay.
So I think they're open-minded here. I think we'd probably like to go back to May, where we were very close to a deal, but unfortunately it unraveled from the Chinese side. But that was then. This is October, and I say coming into this, there's a certain amount of new goodwill. You know, let me tell you, Stu, we can't predict, neither you nor me. President's the decision maker. It's possible some better news could easily come out of this. It's possible. And I know there's a lot of discussions going on in both governments about ways and means and decisions that might improve, both in the near and longer term, the opportunities to make agreements. Let me give you one thought.
Okay.
This is just me.
All right.
Secretary Mnuchin negotiated months ago a major opening in the financial services sector, American companies going into China, whereby we would have, our companies would have ownership, right? So we'd go from 49, and don't quote me specifically, but China would permit 49 to 51 or 53, all the way up to 100% ownership over a period of time. Now, that's a really great model because, number one, it gives us ownership and strategies. Number two, that eliminates, better ownership eliminates the forced transfer of technology. You follow? We don't have to put our blueprint on the table, which they can reverse engineer and steal our secrets. Supposing the Mnuchin financial services model was spread out into, let's say, a dozen other key sectors in China. The ownership question, which has come up rather favorably. Suppose that they worked that lane on top of some major commodity purchases by China and lowering trade barriers by China. Look, this is
That
not,
would
I'm
be
not
good.
making a forecast.
That
I'm
would
not
be good.
delivering, I'm not giving you news. I'm just saying we had some pretty good things last spring, like the financial services opening. That could be extended. I say could, and the president would have to sign off on it, but don't rule out the possibility of good news, and I may turn out to be dead wrong here. I'm just suggesting there are antecedents and movement and better mood music, and who knows? Something very good could come out of this. Who knows?
Okay. Can I just sum up our first question? I asked you, are we going to go into a recession in the next year? And you replied, on the basis of the data, you don't see a recession on the horizon.
That is correct.
That's correct.
And can I just add one quick
Please.
thing? I know we're running out of time, but you and I love to go over the break. Look, interestingly, in the last 2 months, every housing indicator, this is interest-sensitive sector, we've had a 100 basis point decline in long-term rates. So look at this. Starts, permits, existing and new home sales, and pending home sales, all the way up. Big up movement in July and August. I'm thinking that's a leading indicator of the economy. I also think monetary policy has a few more notches to get out of the inverted yield curve. We could be in a turning zone back to the 3% growth. And again, I come back to these household numbers and the unemployment numbers. You know, you can look at this much more positively. I know I'm a congenital optimist. I can't help myself. I love America. I also think President Trump has instituted supply-side incentive free market policies that will make America even greater.
Well, you made quite a difference to the market during this conversation, Larry, and we thank you very much for being a part of the show as usual. Larry Kudlow,
pleasure.
everyone. Thank you, sir.
Thanks, Stu.
Always
Thank you.
appreciate it.